Hey, Mike.
Kev, what's up, brother?
Thanks for joining, man. It's good to have you on here.
Of course, happy to be here.
And I think we are just waiting for Leah
Perfect.
with Lighter Capital.
Could you let me know if you can share, if you can start your video, if you have any issues with facing the video?
Field says that it cannot start.
I'm sorry?
It still says that it cannot start.
Okay.
Don't tell me I got dressed up for nothing. Oh, there's Leah. Hi, Leah.
Hello there. Oops. Sorry, it says you're not allowing me to turn my video on.
Checking that out 1 minute. I'm sorry about that.
Oh, maybe you don't want, do you want me to not have video on for now?
Video should be on right now. I'm just checking if something's up with the settings. Just 1 minute. Can you just check right now if you can start your video? Yeah.
Yes.
Hey.
Yes. It will.
There we go. Awesome.
Oh no, it still won't. Oh, there it goes. Hi.
Hi.
Hi, everyone. Nice meeting you all.
You too.
So that's good.
Orange.
Right. And just a heads up, everyone, I think we're gonna go in order with Liliana to Mike and then to Leah. Make the introductions just so everything goes smoothly.
Let's just see how many participants are there. So, hi everyone, good afternoon. We're going to get started in the next minute or so. So while we're waiting for folks to come on, let's get to know each other. You can drop your business name and the name of your business in the chat box, and let's see who's there.
The chat isn't able, the people attending are not able to get into the chat.
Right now?
Yeah, they're not able to.
Okay, just 1 minute. Case 1. Oh, sorry about that. Just 1 minute, please. Kevin, could you just help me out here? If you can just let me know if the chat is enabled right now. If anybody could tell me.
Let me take a look. Any of the audience wants to post in the chat. Let's see if that's going through.
Yeah, I think it's working right now. Thank you, Daryl.
Yeah, that's excellent.
Okay. So let's get started then. So again, welcome to today's webinar, Meet the VC, with Neel Mehta, G2 Venture Partners, presented by Early Growth. My name is Sangeeta George, and I'm in the Event Marketing Manager with Early Growth, and I'll be a host today. Here are some housekeeping notes for you. The webinar will last approximately 60 minutes, including the time for Q&A at the end. You can place your questions in the Q&A panel at any time. The webinar will be recorded and sent to all registrants within 48 hours of this presentation. You can also find this recording and all previous webinar recordings on our YouTube channel. The link to it will be sent on the recording email. And let's talk about Early Growth. Before we get started, let me tell you about Early Growth. At Early Growth, you've got the entire finance stacked. What that means for you is really two things. First, you've got a strategic partner in the growing your business. Our CFOs with the years of experience and dozens of startups under their belts helps you see what's coming, good and bad, and taking advantage of it. From strategic decisions to fundraising, they've seen it all. Before CFOs, senior accountants, and tax advisors take care of all the blocking and tackling related to the day-to-day, month-to-month, and year-to-year of your finances, so you can focus on your business. Both Early Growth and our CFOs have been around the block a few times. We've helped and served over 5,000 clients coast to coast and around the world. As always, our CFOs have helped our clients raise billions of dollars, and we would love to help you and serve you as well. We believe in delivering peace of mind by providing you one of our solutions for all of our needs, including CFO services, HR, accounting, taxes, and insurance. We like to protect your profitability by giving you a sole point of contact to answer all kinds of questions and strategic dashboards to help you understand your business better. We want to be a partner in growth to help your business grow by working in the back end, and you can focus on the growth side of your business. We've also got a special promotion running right now. You must have all started planning your 2022 taxes. You want to get a provider in place before the end of the year, so you can do your effective planning before the year ends. We have a promo running to help you with that now. Get $500 off of your 2022 taxes preparation. So to kick us off, I want to do a quick poll question to see who's in the room. So I'm just going to launch the poll questions right now. Do let me know if you can see the poll questions. That's great. I'm getting to see some answers here. Your team is critical to our success, and that's true. Whether you're building a startup or putting together a great webinar, we've got a number of great partners in the startup community, but for today's events, it's the best of the best. Early growth has always been focused on the team, the community. We know that together we go further. To bring you today's webinar, we have a startup dream team. To tell you more about our partners, we have a moderator, Kevin Scott, with us. And here's a bit of a brief introduction of Kevin. Kevin joined as the business development manager for the SF Bay area in the March of 2022. Kevin attended San Jose University, where he played ice hockey and obtained a bachelor's degree in business administration. Prior to joining Early Growth, he was with ADP, leading the broker partnership program. Kevin enjoys playing hockey, playing golf, and spending quality time with his fiancée and 2 Danes, Chief and Phoebe. Before we proceed, just a reminder, if you have any questions for our VC, please put them in the Q&A window and not the chat. So now, here to introduce our partners and take over, Kevin Scott.
Fantastic. Thank you, Sangeetha. And thank you to everybody that's joining us here today. As Sangeetha mentioned, my name is Kevin Scott. I'm really excited to be a part of this Meet the VC this month. We're doing this on a monthly basis, and really the goal is to make venture capital a little bit more transparent. So I've got some questions for our guests today, but I want this to be interactive, like Sangeetha had mentioned. So please feel free to post your questions in the Q&A. And then towards the end of the call, we'll dedicate some time to run through some of those questions, make sure the audience's questions get answered as well. Now to our partners, our partners are key in making this happen on a monthly basis. We really couldn't do this without them. So I wanted to give them some time to introduce themselves and share a little bit more about their firm. So we will start with Liliana Mehta with GoGlobal. Liliana, go ahead and introduce yourself.
Thank you, Ken. Oh, Kevin, sorry. Hi, my name is Liliana Mehta. I'm with GoGlobal. GoGlobal is a people-first international HR and employer of record service provider. We operate with a fully and global, naturally diverse or remote workforce. Our technology, it's part of the employer of record solution that helps people hire anywhere in the world without having the need to set up a local entity. So this allowed companies to grow and expand internationally faster. GoGlobal is in over 100 countries, and we would love, obviously, to help your business and fast-growing startups to get their footing quickly, and most importantly, compliantly in new countries. Thank you.
Thank you, Liliana. Thank you for joining us here today. And we have Michael Orlando with Bridge Bank. Mike, thanks for jumping on here. Let's tell us a little bit more.
Thanks for having me, Kev. How you doing, everyone? Yeah, Mike Orlando. I'm with Bridge Bank. So we're a full suite venture lending bank. We like to pair with startups, and we do a lot with VCs on providing debt capital to early stage to later stage companies. We provide the full suite as a banking partner, from operations through transfers, paying your employees, helping along the way with raising new equity, connecting you with people, connecting you with different funds. We also were recently acquired by Western Alliance 3 years back. So our assets now are in the $50 to $60 billion range as opposed to prior. And, we are just here as a banking partner, to kind of provide any and all we can for all of the startups and everybody here in the startup community.
Thanks, Mike. Really appreciate your partnership. And finally, we have Leah Edwards with Lighter Capital.
Thank you very much. It's really great to be here, and I'm looking forward to the conversation today. Lighter Capital has been around for 12 years. We're the pioneer in what's called revenue-based financing. We're a good complement to venture capital as well as to traditional banks like Bridge, in that we tend to fund companies that are very early stage. We can loan as little as $50,000, although we can go up to $4 million. And what we do is we loan with no warrants, no covenants, no restrictions, no required guarantees of the founders of startups, and are just really betting on the revenue growth of the company. So we've put together over time more than $500 million of financing into early stage companies. They tend to come back to us for more and more. We've had one company do 9 financings with us because as companies grow, we can extend more capital to keep that growth going. We're here to be very, very founder friendly. The revenue-based financing model requires debt repayment just as a percentage of monthly revenue. So if you're cyclical or have any other reasons why you might have a month of low revenue, you do not get hit with a difficult debt payment in that month. And we're here to support companies in all sorts of ways. We have a lot of perks and benefits, discounts on other software, $25,000 of AWS credits, lots of support otherwise. And I'm just very excited to be able to support startups in this way.
Thank you, Leah. And again, thank you to all our partners here. We really couldn't do this without you. With that said, I am excited to introduce our guest today, Neel Mehta with G2 Venture Partners. We spoke a little bit earlier this week, and he's still recovering from some sickness. So Neel, wanted to thank you for fighting through that and joining our call today. Hope you're feeling better with some tea and lemon. I think a great place to start is for you to tell us a little bit about this background here and what led you into venture capital.
Great. Yeah. And first of all, just want to extend my thank you to Kevin and Sangeeta and the team here for hosting me. It's really exciting to be here and to chat with all of you and really look forward to hearing your questions. And I want to be as helpful as possible. So thank you again to the team here. But just to dive into my background a little bit and how I got to where I am now. So I've been at the current firm I'm at called G2 Venture Partners for a year and a half now. So I'm relatively new to the venture world, but part of my experience is I spent 5 years before that in an operating role at a startup in the Bay Area called Zoox, which was developing and continues to develop self-driving robo-taxis from the ground up. So I moved out to Silicon Valley in 2016 after spending several years at Morgan Stanley, came out for the big dream to build something from the ground up, and had an amazing experience during my time at Zoox. And part of my role there was, leading strategy, leading various finance functions, and really helping the company think about its fundraise efforts. And so I like to think that I've seen things from both sides. I've been on the other side of the table where I've had to talk to many venture capital investors to raise capital. I know how challenging that can be, and how daunting it can be when you really want to focus on building your company. But now I'm on the other side of it where I get to talk to amazing entrepreneurs like folks on this call every day and back companies that are going to pave the way for the next generation. So that's a bit about my background. I'm based here in the Bay Area. in Silicon Valley, sort of in the Mountain View, Palo Alto area. I've been out here for the last 6 years, and originally hail from the East Coast. So I grew up in South Carolina, then made my way up to New York, and then came out here.
That's great, Neil. And I would love to hear what's exciting for you personally in VC right now.
Sure. Happy to touch into that. And a lot of this ties to our firm, which I'm sure we'll get to in a bit, and I can talk about the firm. But I think for me and what brought me to this particular firm in venture is really just the trend surrounding climate. So I think today, finally, there's sort of widespread recognition that there's a lot for us to do to get down to net zero emissions. And rather than everyone sort of throwing their hands in the air, we finally have the technologies to get there, right? And a lot of it is about taking what we have today and scaling it, right? And so that's what I'm really excited about. That's what our firm is excited about, is how do we take, traditional industries like transportation or manufacturing or logistics, which are so critical to our economy. How do we make them more efficient? And then how do we also make them more sustainable? What technologies can we invest in? So that's what's top of mind for me, and probably will be top of mind for me for a long time. And I think today in particular, some areas where I've spent quite a bit of time is sort of on the theme of the electrification of everything, right? So it's starting with vehicles where, finally it's become, after a few years, it's become a foregone conclusion that the world is headed to all electric. And it's happening faster than anyone imagined. So that's going to obviously have a big impact on greenhouse emissions. But then how do you carry that over to other sectors? Maybe it's electrification of the home. Maybe it's electrifying industrial operations. And so the top of mind thing for me today is really the electrification of everything. And finally, in addition to the public support we have in the capital in the system, there's a lot of government support. I think some of the biggest things that have taken place or come out of the administration, over the last few years have been initiatives around climate. So, you have the Inflation Reduction Act, Infrastructure and Jobs Act, all those things put the spotlight on climate. So that's what I'm excited about the most.
That's great. And I do want to kind of shift over to G2 specifically. You had mentioned that you're excited about technology, electrification. Like, is there anything, or I guess I should say, is there a specific focus on any kind of sector, or is it more of like a generalist fund for G2? It'd be great to kind of get an overview.
Sure. Let me take the time to introduce the firm a bit. So, G2 Venture Partners, we're based in Portola Valley in the Bay Area. We were founded in 2016, and we're effectively, a spinoff from a firm called Kleiner Perkins, which has, decades of experience investing in technology companies and has really done a wonderful job. So all the founding partners I work with at this firm, they all invested together for about a decade at Kleiner Perkins. And they were investing in things like clean tech and, sustainability and industrial tech, more than 10 years ago, when it wasn't, really the sexy thing to do. And so they continue to do that, going through all the ups and downs that the sector has been through. And they created this firm, and we're doing the same exact thing here at G2 Venture Partners. So our mandate is, let's look at all the traditional industries out there, transportation, manufacturing, logistics, energy, agriculture, e-commerce or retail. And then how do we apply scalable tech to making those industries more efficient, more sustainable, so that they can keep up with, the growth in population and just general demands as the economy evolves. So that's what we focus on as a firm. We are, in terms of our fund size, we're on our second fund now. So our first fund was a $350 million fund coming out of the gates in sort of 2016, 2017. We raised a $500 million fund last year, which we're investing out of now. And we're looking for early growth stage opportunities where companies they have strong product market fit, they have commercial traction from blue chip customers, and we're investing our capital to help that company scale. And so I'm sure we can go into specifics here, but our check sizes typically tend to be a little bit larger. We're in the $15 to $50 million range because our capital is going towards sort of these growth rounds to help the company scale.
That's great. And so you mentioned you focus on these early stage companies. Are you investing in seed and Series A?
Yeah, so we typically don't do seed, and the reason for that is mostly because we're looking for companies that have already proven product market fit. So we're a little bit later in the evolution. We have done A. We typically our sweet spot is going to be B and beyond. But we get to know companies very early along the journey, and we could talk a little bit more about this. But the thing we like to see is as we're tracking a company, sometimes we're tracking them 2-3 years before we invest. We like to see them sort of execute according to their plan and see that vision come to fruition. And there's nothing better than being able to invest in a company that you've been talking to for the last 3 years and they've gone through that trend. Like that's the holy grail. That's what we love to see. So we are a little bit later stage, but we start the conversations very early.
That's great. That's a good segue into my next question. I mean, it sounds like you take your time on these investments. What does the decision-making process and due diligence process look like? How long does the due diligence process take as well?
Mm-hmm. Yeah, so it's a great question, and I'll go into some specifics here. The short answer is it can depend quite a bit on the how fast we may need to move just based on the process. There are some instances where a company is moving fast along the process, and we can move fast, but generally, we take our diligence extremely seriously. When we make decisions as a firm, we make them collectively. It's not one partner that decides, okay, I want to make this investment. It is a team decision, and there's 15 of us around the table that are making this decision together. And so in order to prepare our team for that, there's quite a bit of diligence that goes in ahead of time. It can take several weeks. In most cases, it does take several weeks. What does help is if we're tracking a company from early on, where we can sort of see the trends and the trajectory, it's easier to move fast in that regard. But just to give a sense for the type of diligence we start to do as you get into the early growth stage, I think number one, a bulk of our diligence revolves around what the customer says. We will almost always call customers and we will ask them for their perspectives. We'll want to know, why did you choose this company versus all the other companies in the space? What is different about them? What are your plans for the future? Are you going to buy more of what this company has to sell? So really drill into the value proposition and the ROI. That's key for us. And I worked on one deal very recently that we invested in. We talked to, it was a later stage deal, but we talked to 13 customers before we got there. But once we got there, we had so much conviction because we heard it from multiple customers over and over again. So that's number one, is understanding what the customer is saying. Number two is sort of diving into the metrics, understanding how has the company obviously grown its revenue? Have they grown in an efficient way? Are they spending capital to grow efficiently? What are the underlying unit economics of the business? That's something that, as you start to get into the growth phase, becomes all the more important. So yes, maybe you have product market fit, but can you sell your product at very good margins? And if maybe not today, what is the path to getting there? And sort of that just gives you a sense for how important the product is and sort of the economics underlying it. So those are the two key things. And of course, we like to spend a lot of time with the founders themselves and figuring out, where we can add value and where we can be most helpful. But those are some of the big elements of diligence, and that could take a few weeks before we get to a decision.
That's great. Now, you had mentioned you're reaching out to your clients and checking in pretty consistently. Are there any, COVID has changed things. Are there any geographical constraints when it comes to making an investment?
Yeah, we typically, most of the companies we've invested are based in the US. We have done investments in Canada and in Europe, and we're open to doing investments in other places around the world. So it doesn't have to be, you know, they're not necessarily geographical constraints. I do think the big thing we look for in other VCs as well is, you know, we got to get a good sense of corporate governance. That's always really critical. And sometimes if you're investing in a company in a region that you don't have any familiarity with, you may not be able to get there from a corporate governance perspective and feel comfortable enough to invest. And so, yeah, I think I would say we are cross-border. We talk to a lot of companies in Europe these days and in Asia. And I expect over time, you know, there'll be more opportunities globally.
Great. And how involved are you with the companies you invest in? Are you taking a board seat?
Yeah, typically, you know, our firm, we typically do lead rounds. We lead and price rounds, and we do take board seats and board observer seats. And we are pretty involved. And ultimately, it comes down to the founder and the entrepreneur, and every situation is different. You know, if we can add value, you know, whether it's helping them strategize around their go-to-market, helping them fundraise, whatever it is, making introductions. We like to get involved. Everyone at our firm, we spend considerable time with our portfolio companies. When we write the check and invest, it's day one. And we, in many cases, you know, folks here will be on the board for many years and help that company scale and grow. And so the short answer is yes, we're active. That being said, we're always respectful of the company and the entrepreneur. And you know, we want to be the most value add we can. And so we kind of defer to the CEO and in many cases and the founders to make sure that, you know, we're adding value in the right places. Yeah.
That's great. So you mentioned you're taking a lead on the investments. Are you ever doing any follow-on investments?
Mm-hmm. Yes, we do follow-ons. You know, typically when we're considering an investment, a lead investment, we also think about the future. You know, what are the future capital needs of the business going to be? What do we need to see in order for us to participate and to do a follow-on? So that is part of a holistic strategy. When we write a check and invest, we're also thinking down the line, you know, 2-3 years down the line, when does a company going to need more capital, and are we the right fit there? But we have criteria around that, right? We want to see that the best scenario is when, you know, you invest in a company and then 2 years later they come back to you and they've achieved the plan or they exceeded the plan, and they're raising more money. And there's just a lot of positive momentum. And in those instances, we're very excited to lean into invest. But that's, you know, it all depends on how the company performs at the end of the day.
Got it. Okay. And relating to performance, what are the key differences between, you know, that Series B company versus Series C?
Yeah. It's tough to tell these days because the letters are, especially last year, the letters, you know, or Series A, B, C, it almost didn't mean a lot because you had companies that were, you know, maybe Series A that were raising massive rounds. And then, so every company is different. They're on their sort of different commercial traction sort of curve. But I'd say, like, being very high level about this, as you start to go to B2C, you know, you want to continue to see, you know, very elevated growth, you know, company hopefully doubling or tripling or more every year, expanding their customer base. A lot of times at like a Series A or Series B level, there's quite a bit of customer concentration. That's like almost to be expected. And you want to see some diversification there. You know, are they breaking in? Have they been able to improve product market fit across more industries or more customers or use cases? That's the typical thing you want to see as you start to move into the later stages. And then the last piece is around the unit economics and the margins and whatnot. Again, you know, maybe when you're starting off, the economics or the margins and all that, they haven't been quite dialed in. But as you go from B to C, you want to see that consistent improvement that, you know, the company has started to pull the levers to be able to enhance margins and enhance their economics, and that they're growing efficiently. You know, they're not spending, you know, $100 million to grow revenue by $5 million, from like, they're not spending $100 million in sales to grow the sales by 5 million. So you want to start to see the efficiency and the underlying metrics that everyone talks about, right? The LTV to CAC, the net retention, all these things, they just become way more important as you start to go Series C and later stage.
Yeah, and obviously these are larger investments. How many investments has G2 done over the last 3 months, and how many do you think G2 is planning on doing in the next 3?
Yeah, it's a good question. I mean, we do a handful of investments every year. So I think in the last 3 months specifically, we closed one deal that we announced in a later stage warehouse automation company, which we're really excited about, a company called Locus Robotics. And then there were several deals that we'd done earlier in the year. And I know I see some of the questions in here too. What is a handful? Call it 5 to 8 investments checks a year. Again, every year is a little bit different. You might have a year where it's a little bit less. You might have a year it's more. And one thing I'd like to emphasize is, we take a long-term view. We pay close attention to the markets. We look at the risk reward out there. We look at, do the valuations and the fundamentals make sense? And you might be in an environment where, you go a long period of time without making an investment because you're not finding the company that you want or the right, we're always looking for quality. And so, and companies that sort of fit our mold and fit our thesis. And that could take a long time to find. So I'd say it ebbs and flows quite a bit. But generally we're aiming for a handful of investments a year. And then moving forward, again, it really depends on the environment, not just the market environment, but really, are we finding the type of quality company that we want in the sectors that we care about. But we think there's always, despite the market environment, whether it's good or bad, we always think there are good opportunities out there, but we have to find them. Yeah.
Great. And then this next question is for the founders out there in the audience. What do the most successful founders do really well from your perspective?
Yeah. So I think there's obviously like table stakes is, So table stakes is basically, being able to tell a compelling vision, right? And be able to explain it in very, very simplistic way. That's important because, venture capital investors, they're talking to a lot of companies, in a given year, a firm may talk to over 1,000 companies. And, everyone is, while they might be very interested in your general sector or segment, they're not the experts on what you do. You are the expert as entrepreneurs. So I think as kicking things off and being able to tell that vision and that story in a really crisp way, in a way that just makes sense very quickly, that doesn't require a lot of, follow-up questions or unraveling there, is extremely critical. So that's always one thing I recommend folks practice. Just like really nailing that down, because that is table stakes. I think some of the other things that we care a lot about are obviously, we think about, especially for our fund, and I think even like the seed and Series A, as investors look at that, right? Like, do you have a clear, what is the sort of the proof that you have proven product market fit, right? What are the things that you can talk about, and like immediately like leading with those that give you confidence that, hey, they've proven product market fit, really coming out strong on sort of painting a picture on the commercial traction is really important. And then I would say just being, it's always a fine balance, and this is a hard thing. I've been on the other side of the table where, you want to tell a very, very rosy story and paint like a vision how something could be a $10 billion, $100 billion, the next Tesla, Facebook, whatever. And that's important. It's important to have that vision, but also be a bit grounded, right? And really understand, like, have like, be able to defend how big your market opportunity is. Often we get, there's a classic, TAM slide, total addressable market slide in a deck. And it's always a very, very large number, which is great, but can you actually defend that? Like, did you do the bottoms up work did you talk to like 100 customers or 100 people in the ecosystem to figure this out? That's what we like to see, that like a lot of work has been done to really validate that this is going to be a massive TAM. Because actually, it often happens where companies raise tons of money, they get a couple of customers that are great, but then you start to get to Series D, Series C, Series C, D, E, and you realize that actually the growth potential might be a little capped here, or it's just too early, or there's some constraining factors. And so getting ahead of all that, if you're starting a company, is like, do all the work ahead of time, talk to customers before you start something and really, pitch to many VCs. That's important.
That's great. Now, conversely, is there anything that founders are doing, maybe unknowingly, that can be irritating or kind of turn off investors?
Yeah. I think, going back to the point around the pain, and I'm going to focus more on the earlier stage piece, because I know that a lot of entrepreneurs here are in the early stage bucket. But again, painting, like showing projections around a market opportunity, but it's not actually buttoned up. It's not based on proprietary research that you've done, and just saying, okay, this is a $10 billion opportunity, right? How do you actually get there? That's one thing that we see a lot that can be frustrating, is just not a lot behind that. The second thing that is frustrating, again, it alludes to what I said earlier, is like expecting when you hop on a call, with the venture capitalist or a prospective investor, expecting that they already know about what you're doing. And, it's very often you get on a call and, really bright entrepreneurs, but they're explaining things with a lot of technical jargon. And you have a 30-minute meeting, right? And you're trying to get to the crux of what they do and how it's going to be big. And if there's a lot, you start to go super in the weeds at the very beginning, and there's too much technical depth there. It can be an immediate turnoff for a lot of venture capitalists, because again, there's like thousands of opportunities, and you have to figure out where you're going to spend your time. And if it's going to take me, a long time to get up to speed on this business, then I might say that this is not a fit today. Maybe it's a fit a year from now or 2 years from now. So I think that's one. And then the third one I would say is, the sort of a little bit of a pet peeve is like keeping up with relationships and whatnot. Like it's very, you might talk to 100, if you're an early stage customer, early stage venture or startup, you might talk to 100 investors and they might all say no. And, they might say no for various reasons, and really like understanding their feedback I think is important. Why are they saying no? What are things I can do, I should be aware of, so that when I pitch to them in a year from now, I can come back with better answers, or I can come back with better metrics. So I'd say, if someone tells you no, it's a seed round or Series A round, don't just assume, okay, this person they're never going to invest and write them off. Never write anyone off. Especially if they have the capacity and to be able to eventually be a meaningful investor. Really understand their perspectives, and think about what your follow-up will be and when you'll come back to them. Because, again, it's very common where VCs will talk to someone in the seed round or the Series A, and, 3 rounds will go by before they invest. So at the end of the day, you're playing a long game. All the relationships are important. And so cataloging that information and knowing when to come back to the investors is really important.
Yeah. And now, speaking of the long game, and not to focus too much on the negative things here, first we had COVID, which shook things up definitely. And now we're kind of facing a downturn in the market here. How have those kind of shaped venture capital?
Yeah. I think COVID is interesting. Even though we've come out of it and everyone sort of back at work and whatnot. I think it has changed venture quite a bit. Like a lot of deals and conversations, they happen over Zoom. Like we're over Zoom right now, right? It's kind of like this. A lot of pitches happen over Zoom. And I think the model has changed, where before it was very formal, or maybe pitches were being done in person. And now it's almost like there's a greater volume of pitches happening, but it's happening over Zoom. And I think there are pros and cons to that. The pros are, for the entrepreneur, they can talk to more people in a more efficient way, more investors in a more efficient way. Same thing for VCs. We can talk to more entrepreneurs in a more efficient way. But on the flip side, it can feel a little bit, like you're not really building a relationship with someone. It's more transactional. You're getting on a Zoom, you're hearing another pitch, or you're saying another pitch. And so it's important to strike a balance. And what I'd say is, like, even in these Zoom meetings, it's important to, like, get to know each other and find common ground beyond just the company, right? It's not just about the transaction. It's like building a good relationship with someone. So that's one thing that has changed venture, I think, quite a bit. Is just a velocity of deals that are happening over Zoom, and conversations happening over Zoom. And I know, our firm, we're pretty much back in person. We love to have entrepreneurs in our office. We're seeing more and more of that. But when I talk to peers in the space, a lot, it's become the job is tilted more and more towards being a remote job, where you're doing a lot remotely, and maybe you'll go visit the company. Sort of things are really trending in a positive direction. So that's on the COVID front. I think on the macro front, you obviously saw a big slowdown, over the last several months. Not as many deals are happening or getting done, and that's because for a variety of reasons. I think after we had, 2021 was a year of euphoria, right? You saw everything kind of getting funded, very big valuations, very big check sizes. And then the market, there's a lot of rationalization that's happened in the public markets, and that's made its way over to the private markets, right? And it's just a natural evolution, right? This happens, it's a cycle, it happens. And so, a lot of investors are on the sidelines, waiting for more compelling entry points, right? So that's what you've kind of seen over the last few years. But the difference is, I think this time around, is there's still a lot of capital, right? A lot of venture firms, they raised big funds in 2021, even early 2022. So the capital is, I think, still in the system. There's quite a bit of it. There's record amounts of venture capital have been raised, but the deployment of that has slowed materially. And so I think investors are obviously more cautious, but I think as we go into the next year, we'll see what happens with the economy. No one can predict exactly what will happen, but I think if there's sort of a soft landing, which many people think now, just given that inflation seems to be easing, it's going to come back, and there are going to be a lot of great companies that need to raise capital, and the capital will be there. But I think it just requires a little bit more patience, and there's going to be a little bit more cautious skepticism around terms and whatnot, right? Making sure that we don't fall into the pattern we did in 2021, where everyone's chasing the deal and investing at very, very high valuations that really don't make that much sense, like in the context of history and what you've seen previously.
Great. Now, I think I'll probably end on this final question, so we have enough time for the chat. I see quite a few questions coming through here. What's the best way for founders to get in front of venture capital firms like G2? Yeah,
that's good. It's good. Good question. I think there are a lot of ways. I think it's, I am not as much of it. Like, look, cold emailing, if you have to do it, you have to do it, right? And you have to do everything you can to secure funding for your company. So I understand the cold outreach, but I think the best way is always to, do your homework, make the list of logical firms that could invest in your business, and then leverage your network, LinkedIn or, your first degree, secondary connections to get an intro to the firm, or get an intro to the person. And just being realistic here, there are a lot of companies that are in the market, and it's a volume. There's a volume issue where a venture capital firm of 10 people, they can't look at everything. And they need, and often the ones that they don't look at are the ones that come to them via cold email. So my main advice is always try to go through a connection if you can. Someone that is maybe at least loosely connected with the venture capital firm always helps. And then the other thing is, like, networking events and things like that are really key, where you can meet someone in person. You can actually take 5 minutes to explain what you're doing. that they're more likely to remember you and to follow up in the future. Those are probably the best ways, versus kind of, doing the cold email. And then I think the last way is like always try to have a hook, right? Especially as you start to go for maybe, Series A or whatnot, bigger like higher quantum dollars, is like, if you have great traction with a really important customer and out there, a big company, lead with that, right? That's what the thing that's gonna have to jump out. If you're working with some of the biggest companies in the world and they found interest in your product or your service, then lead with that. That's more likely to get someone's attention. Yeah.
Now that's great insight. And that was, that's one of my final questions. And so I'm happy to kind of turn it over to some of the questions in the chat and in the Q&A section. Ayush is asking, how do you as an investor predict revenue for an early stage company to ensure you get your money back?
Yeah. So basically what we do is it's a combination of, it depends on how early stage, but let's just say it's like a Series A company, right? We obviously leverage the financials provided by the company and the forecast. And then we kind of do our own work there. And I think for an earlier stage company, it's more of a bottoms up build where, okay, you have one customer today, they're paying you say $2 million ARR. How do we think that customer is going to expand next year? We look at the pipeline, what does your sales pipeline look like, and where are various customers in your funnel? Are they earlier in the funnel? Well, if they are, then you sort of discount out. If there's a few that are late stage in the funnel, what are those worth? What are those going to be worth? So we are typically building a bottoms up forecast for an earlier stage company to understand what is your revenue is going to be 2 million today, but then you're saying it's going to be 10 million. Can I underwrite that 10 million? What do I need to believe to get there? And that's the big work that we're doing. The bulk of the work we're doing is we talk to the customers to really get a sense of like, is that 10 million going to happen? Obviously we put our own guardrails on it. We do haircuts and whatnot, and then from there, as you start to go further out into several years out, then it becomes more of a higher level forecast. Then it becomes a lot of it's based on the market opportunity and what type of market share you think you can get. What's the competitive landscape? So it goes from sort of micro level understanding to more macro level understanding.
Right. We answered this towards the beginning of the call, but this one is for Nick. What are some of the key criteria that you look for when deciding whether to invest in a company?
Yeah. So I think first, we have to be excited about the vision and the solution that they're pushing forward. Is it one, an exciting technology that sort of fits our mandate and what we're here to do? And then two, is there what's the value proposition, right? How big of a value proposition is it? And that shows up in the customer data, right? What is the customer saying? Can the customer live without this? Can they not live without this? Obviously, the more critical it becomes to another customer, then the more we weight that. And then the big thing is defensibility. Is there a moat around this, right? As we think, 5 years out, 10 years out, who else is what you're doing very hard? It's like a simple question, like, is what this company doing hard? And there's different flavors of that. Is there some technological breakthrough here that's going to be hard to mimic, or is there some other moat? I'd say those are the initial things that we're looking at as like a starting point. And then if all of that is exciting, then we start to really dial into the metrics, right? And it's like, who are your customers? What are they paying you today? Are they going to grow? Do they love your product? Okay, what are the unit economics of your business? Is this have the potential to be a high margin business? That's important. What's the capital intensity associated with this business? How much capital is going to have to be put into this business to get there? So then it starts to go deeper and deeper into more of the numbers and the financials.
Absolutely. Great answer there. And Sangeetha, do we have time for maybe one or two more questions?
We can do one or two.
Okay.
Brief, yeah.
Okay. And this is an interesting one here. Stan said, I met a VC who said his best deal ever was from a cold call. Are there any thoughts on that?
Yeah, no, I'm sure it happens. And sometimes some of the best deals happen in a very random about way. And so that's awesome when it works out that way. And so I don't want to necessarily discourage folks from cold emailing, but I always say that still the best approach is like, can you find a connection, a mutual connection to get in touch with them? It's just more likely you're going to get the time of day versus a cold outreach. But yeah, it works. I mean, you see it in business all the time, you know, being able to lure customers and whatnot. Cold calling can work. It's just a lower probability.
That's great. And I guess we can do a quick 2-for-1. Grace and Paul are asking, do you invest in the digital health space? Do you invest in deep tech?
Yeah. So on the digital health space, we don't do much in the healthcare space. And a lot of that is not because we don't think there's some massive opportunities there. There are, but you know, we are experts in specific areas, you know, like the ones I mentioned, you know, industrial tech and these types of areas. And, you know, we want to be very mindful and careful as if we venture outside of that. And so that has not been a emphasis as of late. And then on the deep tech front, there's different, I'd say, flavors of deep tech. So hard to exactly define. I mean, generally we don't do deep tech, but I think, you know, we have done earlier stage deals that most folks would say are deep tech. And we do those deals when we think, and when we have conviction that there's a strong customer pool there, that there are big customers that are saying, hey, this is the right approach, this is the right technology, and I'm going to sign up for that. And so even though there might be development and a lot of R&D work to get to a final product, a big customer is validating that. That's when we would do something, you know, more in the deep tech world.
Really appreciate that, Neel. Thank you. And apologies if we weren't able to get around to your questions in the chat there. I do want to be conscientious of time here. So that is all I have. Thank you again, Neel, so much for jumping on here and giving us such great insight. To Liliana, Michael, and Leah, thank you as well for your partnership. We really couldn't do this without you guys. Everybody, please feel free to reach out if we didn't answer your questions, or if our partners can be a resource moving forward. Sangeetha, I will pass it over to you.
Thank you,
Thank you, everyone.
Thank you, Kevin, and thank you, Neel, for this wonderful time. So you can get in touch with us at earlygrowth.com, or you can follow us on social media platform over there. And we also have an upcoming webinar on January 11th, 2023, the upcoming Meet the VC. You can, we'll be sending out the invites pretty soon over there for that, and you can register for the webinar. And if you have any questions for Neel, you can definitely connect with him on LinkedIn and he can help you out there. Thank you.
So, thank you, everyone.
Thank you, everyone.
Appreciate the time.
Thanks, Neel.
Thanks,
everyone.
Bye-bye.
Bye.